today I'm going to jump straight into it. The Australian dollar range bound at the moment, but are we poised for a break? To take us through it, Nick Twidale from FP Markets joins us live in the studio. Nick, welcome to the program. Thank you so much for joining me.
Thanks for having me.
All right, let's delve into those FX markets then. The Australian dollar very much range bound at the moment, sitting around that 77.50 mark, but it's kind of been stuck between 76 and 78, hasn't it? Are we looking for a break?
I think we are. I think we've seen it. We've come through nicely. It's got a real decent appreciation over the last 6 months, really 6 to 9 months after we saw that huge dip from the COVID-inspired panic. Now we're sitting at the top, and I think everyone's looking for that fresh catalyst. I think we've got a daily chart that's just coming up there, and as you can see, it's sort of squeezing into that upper range. It has been very range bound. It has capped out a few times just above 78 cents. I think now we're looking for traders to see where that next move is. If that catalyst takes us to the top side, I think we'll see it grind higher. That could be from renewed strength, decent numbers, and certainly China's a big influence on us as well. Traders are poised for that move as well. So I think guys now, they're either happy to have taken their profit in this upper range, or they're looking for that break higher. Conversely, if things do take a turn, either sort of worse for the Aussie or better for the US dollar, then I think there could be a significant break to the downside. So break trades out this range, really.
Are you looking for a certain level on that top side in terms of resistance?
Yeah, I think once we, and that chart probably doesn't go out quite far enough, but I think once we break through this sort of initial resistance, which is capped out a few times at 78.20, I think was the recent high. If we do knee jerk above that, I think we're looking at 81.50, 82. I don't think we're going to see it too much further than that in the current market conditions.
And what are you seeing when it comes to traders on the platform? I mean, currency markets are very difficult to forecast, but what are the FP traders doing?
Yeah, we have a very, very tough job, don't we? A lot of guys, I think, have faded this move, and they're happy to have got on. It was a nice sort of bandwagon to get on the back of, as I said, for the last few months. We've seen people fade that move. I think they're now waiting for those break trades. We're seeing a few guys taking sort of casual shorts, but no one really flying into it. Generally, I think there's still the momentum to go for the top side, so I think that's the favoured trade. That's what we're seeing through a lot of the data. But conversely, I think we're going to see break trades either side.
Yeah, that momentum is key, isn't it? And a lot of traders now looking for volatility in those FX markets that just hasn't been there over the past couple of weeks. But sterling has been the outperformer over in 2021, obviously pushing towards that 140 mark last night, not quite managing to get there. But all focus in the UK, obviously, on that vaccine run-up, which is why we're seeing an outperformance. But it was an underperformer last year, along with the FTSE, wasn't it? So what are you seeing when it comes to traders buying into that move and that momentum going forward?
I think we're still going to see more of that momentum. Certainly the trading community is looking at that. Some may have missed that initial move, but there's probably more. The feeling out there, there's more topside to come. As you said, FTSE lagged, sterling lagged a lot. There was a lot of debate. We knew there was a lot of volatility going to come from Brexit. To be honest, the Brexit fears not really moved through to the market as much as a lot of naysayers were fearing. If we look at that chart as well, it's been a lovely move up. I mean, that's a pretty good sort of like trend line coming from the downside all the way back down sub 115. Those highs just beneath 140. Experience tells you we're going to touch 140 at one point. Whether it touches and comes back off, I think it's going to be a lot more to do with the US dollar, so that's a cable chart. There's a euro sterling chart as well, which I think is maybe even more indicative of where we're going to see volatility in sterling. So certainly against the euro, we've got a good break there, and funnily enough, today we've seen an even sort of better move. We've slid through that support trend line and down to 86.52. A lot of guys were preparing for that. That was sort of a big move for, and as you see, it sort of touched a few times sub 88. A lot of traders were jumping on the back of that, and I think that's what's going to give that. If we see the dollar come off, then cable can really accelerate to the top side, and people are looking to jump on those.
Yeah,
ones.
there's obviously that divergence there between the UK and Europe, isn't there? I mean, how do you play those cross rates then? If you're not looking at a US dollar trade, is euro sterling your favourite, or do you play it against a safe haven like sterling yen or something like that?
I think sterling yen's another good trade, but we're seeing very, very sort of quiet markets in the yen and yen crosses, and that's not what you'd expect given what we've seen over the last 12 months. I mean, we're now sitting nearly a year when things really started to heat up. And yen's been probably the most disappointing for those of us that love a bit of volatility. So sterling yen, I think there could be some moves as well. I think that's something that we definitely could be looking at, but that's been grinding higher nicely. I think euro sterling, it's a great cross to trade. It's probably the most liquid cross in the world. And when we do get decent breaks, as we just saw there on that chart, of longer term support levels, then there's a good longer term trade in it for traders.
All right, talking of that longer term trend then, let's go back to that sterling chart, that second chart that we had up on screen. How do you play that then? If it is very much a long term trend, are traders looking to jump in on those pullbacks? You said that 140 level was a psychological level. So obviously, we might see a pullback once it tips that point, but where do you enter that trade, do you think?
I think you enter on a break at the top side. And then, as you quite rightly said, I think 140, whether we like it or not, is always going to be a key cycle level. I sort of go back to my youth when I remember 165, God knows how long. But I think that will be pullback levels. You will get pullback levels. There'll be a lot of options interest, certainly on the big figures. 140, obviously, clearly. So that's probably why we've seen it stall ahead of those at the moment. If we do get a break, it can break, and you know what sterling's like. You can get 1, 2, even 3 big figures out there on a whippy session. But you will find those big figures, things like that key cycle level at 140 will be a pullback level, and people will be looking to get back in there. So I think it's setting up nicely for a move in the short to medium term.
So have you been looking at that options volatility when it comes to the pound? I know that options vols have been reduced. But do you think those options traders are expecting that boost as well?
I think so. I think they're sort of like slowly getting ready for that increased volatility, and you've got some of, obviously, the sell side. You've got the banks that tend to be naturally short because they're throwing them out. I think they're changing their position now. So there's certainly that expectation in the market that volatility is going to increase, and that's coming across in currency markets. So timing's key, like we always say. We could be sitting here and I could be wrong, and 2 weeks' time we're having the same conversation, and 140 is a cyclical level. But I think now it does feel like we're going to see some of these catalysts. We're going to keep looking at central banks. If we do get moves from central banks, then I think we're going to start to see currency markets really kick into play.
All right, what about the commodities market then? Obviously that's very much in focus. Iron ore price rocketing after that Lunar New Year. Chinese back in action today. The commodities play when it comes to currencies, it is about the Australian dollar, it is about the Kiwi, but it's also about the CAD. So what are you seeing when it comes to the Canadian dollar? Yeah,
funny enough, when we looked at that chart in the Aussie, there's almost an inverse pattern in the CAD, and oil's had sort of gone gangbusters. It doesn't seem that long ago that we were getting very concerned with oil when we went sub-zero and the entire market sort of exploded. But if you look at that CAD trade, that's a daily chart as well. That's longer term. It's got that similar sort of pattern to the Aussie. If oil continues to rocket, and that will come with growth expectations, demand for oil, then I think we're going to see a break to the downside in dollar CAD. Once again, we've got to look at both sides of the trade as well. It's setting up nicely, and I think you've got that down trend, and then 130 is probably a nice break to the top side. If we see things really go south again, oil price starts to come down, then that dollar CAD trade is a topside move. So a break of those sort of key levels again, and we're talking 140 in the pound, we're talking 130 there in the dollar CAD, and these are for longer term trades. I should say that's a daily chart. I think they could be key levels moving forward, and certainly we're seeing traders lining up for these things.
Yeah, and it is about that broader US dollar weakness story, isn't it? Obviously across the board with that stimulus coming through and dollar index trading lower.
Totally, and I think sometimes we're seeing a lot of disparity. We've seen a lot of disparity in all the markets for the last 9 months. It's made our jobs much, much harder than they used to be.
Yeah.
But if we look at short-term interest rates or longer-term interest rates, and we look at some of the bond markets, and some markets pricing in rate sort of significant rate increases from the Fed, if that's going to translate to through and they're going to be more aggressive than some of the other currencies, then something like a recovery for the dollar could well be on the cards, and dollar CAD could be a key feature in that.
Talking of bond markets, gold obviously in focus after those yields rising. Inflation expectations in terms of those bond markets aren't getting out of hand at the moment, which is why we're seeing gold trend lower, a new low overnight. So when we look at the charts, what levels are we targeting? Any support that you're looking at that would be hard to break through?
Not any real key support at the moment. As we said, I think we've got a chart coming up there as those recent lows, but then you look back, you're looking for sort of other lows. We've broken down recently. You're then going to be looking down to those lows that we hit in March 20. Once again, that's where our usual market just correlation broke down. We had gold getting smashed with everything else. But I think that's going to be a key trade. We see a lot of volatility in gold, and we see a lot of interest in gold. So now you're probably going to be looking to sell rallies, I think, in gold for the short term, looking for that acceleration maybe in the dollar, maybe for divergence of portfolios as well. So really interesting times ahead.
Yeah, retail traders are very keen on that gold price, aren't they? Always an interesting one, particularly those Asian investors are always actively trading it. Nick, thanks so much for joining me on the show today. Hopefully we'll have you back soon.
Brilliant. Thank you very much, Cara.